This conference will now be recorded.
All right. Hello, everybody. Officially, welcome to this episode of Moving Markets. My name is Jeffrey Dunyan. I'm here with Kevin Hurley. Um, Kevin, we have not done this podcast in a real formal way for probably 2 full years. I know we did one a couple of weeks ago that was in a way kind of a trial more for the members of Safe Option Strategies than anything else. So this is kind of our first official podcast back on after a couple of years. Because there's a lot of people that don't know you, take a couple minutes, give the Cliff Notes version of introducing yourself and telling everybody what you do.
Hey, I appreciate that introduction, Jeff. Kevin Hurley. I own Hurley Investments, and I want to say I better be one of Jeffrey's star students back in the day. I had gone to numerous other educations. I can't tell you the amount of money I've spent on them. And Jeffrey kind of put it all together for me, made it so I felt confident not only managing my own money, but saying I can make a business out of this. Jeff and I have known each other for over 20 years, if not more.
I think
And
we're getting old, Kevin. I think it's been close to 30 years now that maybe we've known each
geez,
other.
has it really been? Yeah, we've known each other for too long. And I'm going to give Jeffrey credit where credit's due that through understanding different ways to trade that collar trade and to protect individuals' stock ownership, I've created an investment firm that does just that using those options. So, pleasure to be with you guys here today. I'm also out here in Alpine, Utah, pretty close to Jeffrey. And let's get going. I'm excited to talk CPI numbers and inflation and what the market might do this week.
Perfect. And that's really the biggest to me. Well, let's talk a little bit about what the market did today, because I got to tell you honestly, here we got the Dow Jones finishing up today, 377 points, a little over a percent. The S&P also a little over a percent, up 46, almost 47 points. Nasdaq up a percent and a half, approximately at 173.67. Um, I got to tell you, this was a surprise to me today. Um, I just the I'm trying to figure out where the optimism is coming from in the stock market right now. I know today, I believe there was something that hit the wire earlier today, um, about one of the Fed govs, Philadelphia, I think, made a comment about more evidence that there would be a soft landing, that there's more uh, whatever that. And I got to tell you, for a while I think I believed that I knew what a soft landing meant, and now I don't know if anybody knows what that means. It's
Let me jump
I,
in here, Jeff. When you have moving targets, it's truly hard to understand where your market's going to go. And the moving targets by how many rate hikes we're going to have, how much they're going to be. I think when we talked 2 weeks ago, I was saying it wouldn't surprise me. In fact, I was expecting a 50 basis point rate hike. It only came in at 25. Now, how long are they going to be? Uh, I think when that mark is constantly moving, I'm not sure you can define if it's going to be a soft landing, if it's a hard landing because we were down 20% last year, if we're making a bear market rebound or it's a dead cat bounce. It's I really struggled last week to find out what was going on in the market and to find a reason that we were so bearish. And then not to see the follow through today with economic reports that we have coming up this week. Again, I just scratched my head. I'm going to tell you, sometimes you can't understand stupid, and the market's pretty stupid right now.
yeah, I don't know that I could offer you any major disagreement to that. Um, this whole idea of a soft landing, that I suppose there is a little bit of debate over, number one, whether or not we go into a recession. I'm starting to hear some people adamantly say there's no recession coming. that's hard for me to believe. And then I think most people's definition of the soft landing is if there is a recession, it's not going to be as deep as maybe we thought a few months ago, and it's not going to last as long as we thought a few months ago. And Kevin, you haven't had the well, I know you listen to a lot of the live trade updates I do because you're still an active member of Safe Option Strategies, but I've been saying for a couple of months now the problem I have with this guessing game that is going on as to what the Fed is going to do. All these people that are trying to read the mind of Jerome Powell and the other Fed govs and say, well, now they're definitely not going to raise rates again, or they're not going to do it for as long, or before the end of the year they're going to reverse and go the other direction. Everyone's trying to read their mind, and the biggest problem I have with all of that is the data. Not just the data, but the conditions that are going on in the economy and in the country. And I want you to weigh in on this, Kevin. And I don't think our opinions are too different on this. Why do people keep thinking that things are going to change when you've got a group of individuals, politicians that are in the White House and that control the Senate and that live and die in the bureaucracies of Washington, D.C., who are hell bent on not changing any of their policies that have crushed this economy in the last 2 years? I could have a little more optimism in the market myself if there was anything going on right now that suggested some policy changes, and I just don't see it. There's a continued attack on oil and energy in this attempt to force feed us the green energy. I mean, I've never had so much green forced on me as when I was a kid being told I had to eat my vegetables. It's absolutely pathetic. But that's where I have an issue. I think this headline right here on CNBC, this is one of the first headlines I've seen on CNBC for a while that I kind of agree with. That the inflation report due out tomorrow has the potential to deliver some bad news. It's been great that we've had inflation not going up as high and as fast over the last few months, but it's still going up. And I think tomorrow might shock some people, maybe upset them a little bit.
Well, if I can make a comment or two about inflation, right? I think it was there's a chart out there for Jamie Dimon that you found on CNBC, but more importantly, for those of you that didn't know, the CPI weightings were changed last Friday. And there are going to be some distortions in the calculations going through the next 3 months. They have upped the importance of higher rents, and rents have been up by like 25% year over year. So all of a sudden, the CPI number before has a heavier weighting to rents, which are still going up because it's a lagging, how do you say it? It's just a lagging economic event that happens in a bullish running economy. Yet used car prices, those weightings, which have been coming down, have less of a value than they did previously. So to make a long story short, our whole reports for the next couple, I don't know, the next 3 months aren't the CPI numbers that we're used to, nor are they in a position to accurately reflect how we view the CPI numbers in the past. And there's a chart again, if you'd probably do a little research, CNBC, Jamie Dimon, something along those lines. But it basically comes out and it says that if our CPI number is above a 6.5%, there's a 5% odd that will fall between 2.5% and 3% tomorrow. If it's at 6.4 to 6.5, 25% that will lose 3/4 to 1.5%. If it's between 6 and 6.3, yearly, will go up 1.5 to 2%, 65% chance of that. And there's a 5% chance if it's below 6%, will go up 2.5 to 3%. So it's just, JP Morgan's version on things is that the risk is that you're going to miss the upside opportunity, not that there's a huge risk to the downside. Pretty interesting.
Yeah, as you're doing this, I'm just trying to like research it and see if I can find something real quick. I'm not finding it. I don't know if this is a fairly recent article, but still
No,
maybe a
that's an
week
old
old.
one.
Yeah, it's still
Yeah.
about a week old. But yeah, I heard, I was hearing some conversation about that earlier today about how they've adjusted the way we'll get the CPI numbers. So I know this is really, I'll try and I can zoom in a little bit and make this a little bit bigger on your screen. But the consensus estimate tomorrow is for a 6.2% CPI number. Last month was 6.5, and that was down. Oh, Kevin, you just sent it to me. I'm gonna pull that up real quick for everybody. Um, Give me a moment here.
But this is
Uh,
good information. And what you're showing here for the CPI, the year-over-year gain, the definition in those numbers have changed.
Right,
So I
right.
wonder
And I
how.
imagine there's going to be, I'm guessing that tomorrow there's going to be a lot of uh, conversation about that specifically and about what those adjusted numbers mean. The picture, I've got the picture. I'll show this to everybody really quickly, but it came out a little bit blurry. Kevin just like instantly text messaged this over to me. Why can't I? Yeah, and for some reason it's not popping up on my screen here. Um,
Sorry, I probably should have given that to you earlier.
that's okay. That's okay.
Here I am
But anyway,
snapping out
tomorrow
from my computer to get to
there's
you.
gonna be some comment and some commentary a lot. If you watch CNBC, if you watch Fox Business News, you're going to hear a fair amount of conversation about what these adjustments to the numbers mean. And I think you're going to have people trying to put it into context and saying, okay, based on this adjusted number, that would be a 6.3% or a 6.2% or a 6.1%. According to the way the numbers were before. So you'll have people trying to break that down. People smarter than I am, at least on the math side of things, will be trying to break that down. But I think the article that I was pointing to and referencing a minute ago, this headline article on CNBC, the I think there are people that absolutely believe that that the number's going to increase. It's going to go up and show that, I've shown people this several times, and I know you've seen it, Kevin. Let me expand this out a little bit so I have some room to draw. We had 2021 where, from early 2021 into mid 2022, where inflation was going up like this and it peaked. And inflation has not reversed and come back down. What's happened is it started to go up at a much slower pace. It is
Right.
still going up. And this is the part that I think there is such a disconnect to the average consumer. Inflation is still going up. It went up this high in January of last year, and it's going up this much higher in January of this year. The rate of increase is just not as fast. And people think, I really believe there's a lot of people that say, oh, well, last month it was 6.5, this month it was 6.2, and that's down from the 7.3 that it was a year before. And in people's minds, they see it coming in the reverse direction. It's not reversing direction. Prices are not going down. They're just not going up quite as fast. And so when you start looking at the 2-year inflation, a lot of these numbers are 14, 15, 16% over 2 years instead of up 7% 1 year and down the next year. It's and I again, because of the economic policies of the current administration, I don't see any relief in sight for these inflation numbers. I don't see these numbers coming back anytime soon, or wages and other things catching up to where the inflation, you get inflation back down to 2%. That's fine if you've got average wages consistently going up at 3.5 or 4%. But that's just not
Right.
happening.
Well,
And I don't see it happening anytime soon. And I think there's going to be a hard dose of reality over these next couple of CPI reports as people see that it's starting to accelerate again.
which I'm just going to make the comment, and I was trying to bite my tongue and not be overly negative. But when you take that context into play and you go through and listen to the State of the Union address we had last Monday, or what is it, 2 Mondays ago?
Tuesday.
It's just you just the numbers don't add up, and there's not much to brag about. Basically, telling people, hey, your gas is only 80% higher than it was 3 years ago, 2 years ago.
But
Hey, your
that's not the
eggs,
story people are getting.
right? No, but when you put into the numbers of what you just said, that's the reality, right? Hey, your gas is no longer $2 a gallon. It's 3.80, but it beats being up, 4.50. Hey,
Yeah,
your eggs are
exactly.
still double, but sometime down the road they're going to come down because inflation is coming down. It's just a little bit higher. It's not. It's not coming down. It's just a joke.
Well, and like with the gasoline, the story that people are getting is look how far it's come down from the high. And that's the narrative is we've done such an amazing job of getting it down from the high instead of you're the reason it got that high and it's still much higher than it was before you took office. This is an old picture. This is from the end of last year, and I know, but I just couldn't find a more current one. Although I see this flash on my TV screen at least once a week. There's something like this, but this is kind of what I was illustrating. You had inflation going up faster and faster and faster and faster until it peaked in June. And then each of these months, 8.5%, 8.3, 8.2, 7.7, as we've gotten through November, December, and January, we're going to get January. As we got through November and December, it went down to like 6.6 and then down to 6.5, and it kept coming. But what's so easy for people to forget is that last January, we were up 7.5%. If tomorrow's January number shows that we're up 6.5%, that is 6.5% plus
On
7.5%.
top of
That's
that,
not like we've come down in inflation. It just means this was a more rapid acceleration. Every month, this is still prices going up. They're just not going up as fast. And a more accurate chart, in my opinion, is if you took, October of 21 at 6.2 and added October of 22 at 7.7 and had this yellow bar clear up here to show that over the last couple of years, this is how high we've gone. And that's why I think if that number tomorrow, there's always when we get a number like the CPI report, especially when inflation is such a hot topic right now, there you always hear people talk about these Goldilocks scenarios. It's not too hot, it's not too cold, it's just right. It's not too hard, not too soft, just right. Is there a number? I mean, okay, aside from the fact that there's going to be an adjusted method to the number, okay, set that aside for just a minute, Kevin. What happens if the number comes in right at 6.2? What happens if it comes in line with expectations?
then you see a slow up day until the real economists and everyone know it's a joke and they take profits. We have a flat day tomorrow.
Okay. What happens if this number comes in hot? And I mean more than a couple tenths of a percent off of this, because there's a range. So I think even if you were at 6.4, I don't think that would be a panic. Let's say it came in at 6.7, which would be, outside of that range and a good 0.5% higher than what the consensus estimate is. What's the market reaction tomorrow if that number comes in at 6.7 or higher
Then our market tanks and it loses between 2 to 3%
in a single day?
in a single day.
And what happens if there's a lot of people thinking the number is going to be not great tomorrow? Maybe not a bad miss, but a lot of people are thinking, at least what I heard today and even towards the end of last week, that the number tomorrow is going to be a little bit of a miss, that we're probably coming in a little higher than this estimate in this range. What if they're all completely wrong and it comes in lower? Do we have a crazy big extension to this rally that's been going on for the last month and a half, 2 months?
We do. In fact, well, again, yes, we do. We're going to have a rally and it'll be a pretty darn good rally. but it's probably something that people should sell into. And it's interesting because we still have retail numbers this week, uh, industrial production numbers, business inventory numbers. We have PPI numbers on Thursday, housing starts, building permits. We have monthly options expiration on Friday. It's shocking how important this CPI number is, even though we kind of have some more important, bigger reports coming up down the road here. I think if we're up, we look to sell into a rally or get that put protection on.
Yeah.
I see nothing wrong with rolling puts higher to protect profits.
Okay, so now with all that said, and I don't disagree with anything you said. I think if that number is really, I think if that number's low and shows a continuation of that pattern where each consecutive month the rate of increase is going down, if that pattern is continuing in the report tomorrow, I think you see a pop, and I mean a pop. I would say at least 2% to the upside on the three major indexes, and the Nasdaq probably is going to get one of those 3% days, like crazy big up day. If the number comes in right around expectation or not far from it, yeah, I see a morning rally and an afternoon sell off and a basically flat into the market. And then, like you said, if the number is really high, I see a pretty good size sell off. Now we're in agreement on that. So here's where we'll kind of wrap things up today, or be close to wrapping up. Which do you think is coming?
I wish I could make a prediction, but because they changed the narrative and they move that point, and I'm not even sure how they're going to calculate it and calculate it accurately with the changes and the weightings that have changed. Um, I'm kind of protected. I've got a couple things not protected, but I'm leaning towards protection because I cannot make an accurate prediction because that number keeps changing and I don't have the information I feel qualified to even make an educated guess.
All right. So Kevin knows I can say this with a smile on my face, and he knows that I still love him. We're still friends, but I'm
I'm
not going
not
to take the
making an
I'm not going to
excuse
take the
either.
easy, cowardly way out like Kevin. I'm going to make a prediction. I think regardless of how it gets explained, and regardless of how the different weighting to this number comes in, I think everyone that sees the number tomorrow and knows how to do the math is going to see a number that's hotter than expected. I think the number is going to come in, if the calculations were the same, and last month was 6.5, I'm going to predict 6.9 or 7%. Now, based on the way they change those calculations, I would say whatever the equivalent of that ends up becoming. I don't completely understand the change in calculations, but whatever that change is, I'm saying I'm predicting you get the equivalent to a 6.9 or 7% or higher. In fact, I'm going to basically say this. I'm going to say greater than 6.9%. Now that's, again, that's relative to the way it was calculated, then whatever adjustment is made to that. That's my prediction for tomorrow, and I think you're going to see a sell off, and I think the sell off is going to continue through the end of this week. I think Nasdaq stocks are going to get hit the hardest because with a high CPI number, there will be the assumption that automatically means more aggressive rate hikes, longer period of time where there are rate hikes coming, and less of a chance that we get a pivot away from rate hikes or a reversal where we get some rate decreases. I think everyone's been trying to read the
Hey,
Fed's
Jeff,
mind, even though, to his credit, Jerome Powell has been so consistent in saying he's not changing anything he's doing right away. So that's my prediction. And look, I'll eat some crow next week when we're on if I'm completely wrong, or if I'm completely wrong on the reaction. What if that number comes in and I'm 100% wrong on the reaction and somehow the market rallies anyway? Um,
what moves it
I'll
that
eat some
high for you,
crow.
Jeff?
What's that?
What moves it that high for you?
Um,
Something has to change month over month to move it that significantly. And I think there's something, but I want you to tell me what moves it that high for you. What changes in the CPI that moves it a half a percentage point higher to 6.9?
uh, a lot of companies, a lot of prices going up on things to adjust for and make up for lackluster holiday shopping. There's inventory that still needs to be cleared, but retailers want to get some higher prices out of it. They want to make up some losses. I think you've got look. I am still suspect of the jobs numbers that came out last week. I still think there is something fishy about that 500,000 number when the expectation was around 200,000. And you keep on seeing these reports. I can't think of a day recently that's gone by where there has not been a headline, and I'm looking for the one that was from today. Maybe it's fallen off of here, or maybe I'm scrolling past it. Um, what was the latest? There was another company that mentioned something like 17% of its workforce being laid off. It was another tech company, but it hasn't been exclusive to tech companies. It looks like some other things have pushed it off the list of top headlines here. But every day I'm seeing more layoffs, especially in the tech sector, and eventually, even if there is a lag or if there is some funny math going on and some people have been putting out some phony numbers, even if that's the case, um, I believe eventually the real numbers have to catch up. And that's part of that. That's the other part of what I believe is going to happen. I think you're going to see some evidence of cracks in the job market, which I believe are already there. I believe the cracks in the market are there in spite of those numbers from last week. So I think it's retailers that are going to up prices on things to try and make up for some disappointing seasonal stuff. And it's just it's going to catch up.
If I can give my 2 cents, there are a bunch of categories: food and beverages, housing, equivalent rent, apparel, transportation, vehicles, motor fuel, medical care, education, specialty indexes, core energy services. Um, Motor fuel and energy both came down in December. And if you look at my bills and where I spent my money through January, both of those are up. So I think in those two sectors, and I don't care about equivalent rent or vehicles. If you look in motor fuel and energy, both of those were up when they were negative big time last month in December. Those are going to come in hotter. And that's where I think you're going to see that big, bounce higher. I'm not going to say at 6.9, but those two sectors have increased my
Yeah.
bills, and it's got to be higher. It just has
Yeah, and
to.
one of our people on live with us today said cost push inflation. Look at the base cost of commodities, wheat, sugar. Layoffs not yet going to reflect. Yeah, it's hard for me to gauge. I don't disagree with you. It's hard for me to gauge. I think those layoffs have got to reflect sometime soon, and that's why again, I don't love to be a conspiracy theorist. I find myself doing that at times, but I think there was something fishy about those numbers last month, and eventually, whether it's this time around or not, eventually those layoffs are going to reflect in these numbers. But yeah, I know fuel costs were down and gasoline prices specifically, diesel prices specifically in December, but they were all back up in January,
Right.
maybe early enough in January to be reflective of the January number because um, retailers and wholesalers, everybody, they don't wait to raise prices when fuel goes up. They do that immediately. When fuel prices go up, they instantly raise their prices on things to make up for it and to compensate for it.
Yep. And that'll be the key, and it could be really ugly.
Perfect. All right. We're going to wrap up right there. If that's okay. You got anything else you wanted to add, Kevin?
Uh, Go CPI numbers because I've got a lot of protection on right now.
Okay. um, Okay, couple of just for the Safe Option Strategies members, and I know there's plenty of people that will end up listening to this that are not necessarily Safe Option Strategies members. Um, I'll be sending out a trade in a little while, sometime in the next half an hour to an hour, new trade. Kevin and I are debating a little bit. Sometime in the next week or two, we'll decide if we're gonna maybe talk about a potential trade that everybody that listens to this might have access to. The thing is, only the Safe Option Strategies members will get the details of the trade sent out to them, the exit strategies, the adjustment strategies, and so forth. I'm even debating in my own mind how I want to do that, but we might start doing something like that. But I'll be getting the newsletter out with a new trade, probably no adjustments to anything until after those CPI numbers come out. But a quick programming note for the members of my program. I will be on live tomorrow at the close of the market, but I am not going to be on live on Thursday. I am switching my ski day this week. Everybody knows I go skiing one day a week and don't do this live presentation, but I'm going to switch my ski day from Tuesday to Thursday this week only. So I will be live tomorrow at this time. We will be talking about what happened with the CPI numbers and how it affected the market. We'll be talking about trades and adjustments, and then I will not be live on Thursday. So just kind of be prepared for that. Kevin, thanks a million. It's great to have you. And by the way, last week, folks, it was my mistake. Kevin did inform me, and I completely forgot about it. He was traveling last week on Monday. That's why I went solo. But with the exception of when one of us or both of us is occasionally traveling, we'll both be on Monday at the close of the market. So thank you, Kevin. Everybody have a great day. I'll see the SOS members back here live tomorrow.